So now we'll be starting with next standard, that is accounting standard 10, which talks about property, plant and equipment. For our class purpose, we'll call this as AP. Basically, earlier this was called as fixed assets. Now we don't call it as fixed assets, we call them as property, plant and equipment. Just the name change, that's all. Because the name probably they thought doesn't do justice. Because name is saying fixed assets. Are many assets like this plant and machinery fixed to the ground, or are they movable? They're movable. Maybe that's the reason they renamed it as property, plant and equipment. Okay, this includes all the fixed assets. Everything will come under PPE wala category. Okay. Okay, before we dive into the standard, let's understand what or why was this standard required. Again, we probably learn this with the help of our chart books. The concepts, I mean. Okay. Let's look at the background behind this standard. Sir, I'll give you certain examples. You need to tell me whether they are property, plant and equipment or no. Okay. Simple. So just check. Let us say, I'm able to see Aditya there. Okay. Our online student Aditya is secured a rank. See a final. Yeah, party. Aditya, you have to give party, macha. Okay. So Aditya secured a rank and he got a job offer, let's say from Wipro. 25 lakh rupees per annum. Okay, that's what you wanted. Okay, 25 lakh rupees per annum package. That's the Aditya is super happy. He's saying, I'll log out of class now, sir. Yeah. Yeah, anyways, you know, listen to your boring lectures now. Okay. So he has got a package of 25 lakh rupees per annum. So first, Aditya is excited. Today is his joining date. So he went to Wipro ka office. Alright, sir. He has a bike. So he took his bike to the basement. Obviously, multi-level parkings will be there. So he went to the parking lot. He saw that Wipro Limited, sir, has an ambulance worth 50 lakh rupees. Just for safety purpose, Wipro Limited has purchased an ambulance and they've parked it in the parking lot. In case any employees fall sick, so they don't want to take a chance. So they have purchased one fully functional ambulance. Okay, in case if it is necessary, they will use it. Okay, now I'll give you examples like this. You need to tell me whether these are fixed assets for Wipro, or can I call it as PP instead of fixed assets? Are we fine? So tell me, sir, is ambulance worth 50 lakh rupees, which they have purchased for their own? Is it a property, plant and equipment, or right or wrong answer? We'll see later. For your whatever is coming into your mind, give that. PP or not? So if it is PP, I'll put a tick mark. Yes or no? Yes, sir. Okay, according to you, you are saying yes. So, all right. Aditya felt a sigh of relief, saying that Wipro cares so much for their employees. He proceeded. Okay. He saw that Wipro Limited has purchased the lift. It's a 10-storied building. So obviously nobody likes walking these days. Everybody wants fast-paced life. So everyone wants lift to escalator, blah, blah. So Wipro spent about 5 crore rupees and they have purchased a lift. So tell me, sir, is lift a property, plant and equipment for Wipro? Yes, sir. All right. Sir, he reached the receptionist area on the ground floor. On the receptionist area, he is able to see that Wipro has purchased some nice looking fancy furnitures and some television sets, etc., etc. Later, he came to know that it costs about 50 lakh rupees. This furniture, TV, sofa set, etc., etc. What is this, a property, plant and equipment for Wipro? Yes. Okay. He went to his manager came and picked it up. His working station is on the 3rd floor. So his manager came to the ground floor, picked him up, invited, congratulated him, took him to his workstation. He saw that there is a centralized air conditioning system which your Wipro has installed, and they spent about 2 crore rupees for this centralized air conditioning system. Okay, so is this AC system or AC a property, plant and equipment for Wipro? Yes, sir. Okay. Sir, manager told I'll give you a walk around. It's your first day. Later, anyway, you'll get beatings from me. Later, anyway, that is always there. First day, we treat you very nice. So he was taking not every company, just kidding. Okay, not put wrong thoughts in your mind. Okay, all these are just for the sake of example. Okay, some people are wonderful managers also are also there. Yeah, some Ghatiya people are also there. Yeah, but yeah, that's all right. Okay, coming back to this. So he was roaming around the office. He saw that Wipro Limited, no, sir, has a gym room, sir. Yeah, so that employees can work out, etc., etc. They have constructed the gym room inside the building. So they have installed all the gym equipments, and that gym equipment is all fancy one, and it costs about 50 lakh rupees. Is this gym equipments, which is installed in the gym room, a property plant and equipment for Wipro? Yes or no? Na? Yes sir. Whatever comes to your mind, you tell. Okay, I'm getting popular answer is no. Okay, let me take that as a no. All right, sir. Sir, he met the finance director on the first day in his cabin. In that finance director ka cabin, no, a painting is installed. In that finance director ka cabin, a painting is installed. Let's say the cost of the painting is 20 lakh rupees. We don't. Some artist ka painting. Yeah. Okay. Don't worry about which and all. Concentrate on the amount. Okay. It's a painting and it is costing about 20 lakh rupees. Is this painting a property, plant and equipment for Wipro? No, I'm getting popular answer is no. Let me take this. Okay. Sir, as long as I was telling you vehicle low, lift low, furniture and all, you were saying with full gusto. Yes, sir, yes, sir, yes, sir. That confidence slowly came when it comes to some these assets. That means there was some guidance required. Yes or no? So that's the reason accounting standard 10 property, plant and equipment was formed. Okay, because every fixed asset, no. Okay, these days the things have become little complex, so you obviously need some guidance as to whether we should account, because fixed asset also or property, plant and equipment is also a major part of any assets. So you needed some guidance. That's where your accounting standard 10 has come into the picture. For now, I will not give you the answer for all of this. Standard gives some recognition criteria and it gives some definition. If you understand that, you will be able to decode the answer for all of this. For time being, let us put it on hold. But the intention of this example was just to give you a background why AS10 was necessary. Okay. Now coming back. First, AS 10 no. First exception is AS10 is not applicable one for biological assets. If you have any biological assets, AS10 is not applicable. Sir, biological assets means living plants and animals. Plants and animals, we call it as biological assets. They are not covered. Initially, they thought they will form a standard. Okay, accounting standard still is not formed. Ind AS is there. You'll be studying this as Ind AS 41 in your CA final. There is a separate standard called Ind AS 41 which deals with agriculture, where all those biological assets will get covered. Okay, so that's the reason AS10 excludes that. Okay, people. But one check over here. Except bearer plant. Sir, they're saying exception ka exception. Exception ka exception is applicability or inclusion. Meaning for bearer plant, AS10 is applicable. For other biological assets, because biological assets means plants and animals. One kind of plant, no, AS10 covers, which is what? Bearer plant. Other than bearer plant, if you have any other plants and any other animals, then it will be covered, or it will be covered under AS10 or not covered. Not covered. Did we understand this, people? What is bearer plant and all? I'll tell you one by one. We'll go. So far, okay? And if you have some exploration assets like coal mine, gold mine, etc., etc., there is another standard also there which covers them. Hence, AS10 excludes these assets also. Yes, people? So the exception being what? One is biological assets. AS10 is not applicable because we have another standard for it. But for bearer plant, accounting standard 10 is very much applicable. That is for exploration assets, again, like coal mine, gold mine, etc., etc., we have a different standard altogether. Hence, AS10 takes a backseat, meaning AS10 is not applicable for such assets. Done? Okay. Now, sir, AS10 gives you the meaning of the term property, plant and equipment. If you want to call a component as property, plant and equipment, there are three characteristics. Those components, which means these three characteristics, only that you can call it as what? PP. Okay, you need to remember this. Maybe you may need to call it out in your case study. All right. The first one is it should be a tangible assets. Tangible asset means you should be able to see, touch and feel. If if you want to call something as a property, plant and equipment, you should be able to see them, touch them and feel them. That is one. Okay. Alright. Second one is it should be held for use. The property, plant and equipment should be held for use. That usage could be either of the four purposes. One, in the production of goods, or rendering a service, or administrative purpose, or rental purpose. It should be held for use either for producing goods, rendering service, admin purpose, or rental purpose. One of the four purpose this particular PPE should be used. Only then you can call it as PPE. We'll spend a minute. First, I'll go through everything, all this. And three, that usage should be for more than one. So that is what we were learnt it in our golden days. No? Something which we use for more than 12 months is fixed. Something less than 12 months is consistent. That is also one of the criteria, but other than that, there are other criteria as well. So if these three, all the three are satisfied, then only it becomes property, plant and equipment. Yes, people? One, it should be, first one I think is comfortable. It should be a tangible asset, meaning you should be able to see, touch and feel them. That's one. Second one, you should use that PP for some purpose. What is that? Either to produce the goods. That's the very intention of purchasing a fixed asset, no, sir? PP. Yes. Like ArivuPro, if we have purchased laptop and iPad and all this, for what purpose? We are not selling you goods. In fact, are we selling you any goods? Are providing service, sir? To render service, we are using all these assets. That is that. Suppose a manufacturing company, if they purchase a machinery, what will they use that machinery for? To produce some goods. So that PP either should be used to produce goods or to give some service. That is pretty much self-explanatory. Sir, if they had stopped there, no, only these two was included. 90% of companies ka fixed assets you could have not shown as fixed assets. That's the reason they brought in a third one called administrative purpose. Because there are many property, plant and equipment which will not be straight away deployed or used for producing goods or rendering service. Like here, sir, if we are installing AC in classroom, so obviously that AC is used to give some service. Correct, no, sir? Same AC, if we install it in receptionist area, do we conduct any class in receptionist area? No. That means ideally what? That receptionist, the AC installed in receptionist area is not used to produce any goods, nor it is used to provide any service. But it is necessary for administrative purpose. 90% of your assets, PPs that you see in many companies are all administrative assets. Okay? Because only few of them will be directly deployed in goods and service. Yes or no? Correct? Because if you just take any company, furniture we have. Correct? Furniture, do they use it for service or any goods supplier? No. Furniture is used for what? Employees to sit. And there could be any employees or any guest also. So that means are they all necessary? Very much yes. Yes or no? That means all those assets will come under which purpose? Administrative purpose. So something which you have used for your administrative purpose is also a property, plant and equipment. Got it, sir? Yes, sir. Once more, sir. What, sir? Supply of service related to goods, or it could be anything. Okay? You can give service related to those goods, or you could give any other service for that matter. That's fine. Any, sir. That's all. Can I move on to the next one? Administrative purpose is just for management purpose. Like here, sir. Now, see, if we are taking our coaching example, yes, one of the key pillars to provide coaching are the teachers and students. Those are the main pillars. But just with the teachers and students only can we give the class, or we need other people also? We need some marketing people. We need some calling team, administrative people. Some, if you have any technical issues, some technical team will address that. Yes, no? Correct? So you need some to correct the test. We need to hire some people. Correct? So that means we need to provide them chairs, laptops, AC, etc., etc. Unless we give a conducive or a nice atmosphere, will they work with us? No. Without they working, if they don't work or if they don't stay, can we function, or they are also necessary? They are also necessary. So those assets, those laptops, mobile phones, or machinery, or chairs, etc., etc., whatever we have provided to them, are they giving any? Is it used for supply of service? No. But are they necessary? Yes. They come under what purpose? Administrative purpose. So even administrative assets are also property, plant and equipment. Easy, sir? Awesome. The fourth criteria is rental purpose. Some property, plant and equipment, no sir, especially land and building, we buy with what intention? Let's say we have some surplus money. We purchased off one land. With it, what intention? Or we purchase off one building. To get some intention is what? To earn some rental income or for capital appreciation purpose. Maybe we purchased it at 10 lakh rupees. We feel after 2 years its value may become 15 lakh, 20 lakh or whatever. Even those property, plant and equipment purchased with an intention to earn some rental income is also PP. Okay, you will learn this as Ind AS 40 in your CA final. There is a separate standard called investment property that gives a comprehensive guidance. In AS, we don't have much guidance on this. Okay, sir? Yes? Did you understand? So all these are definition of PP. In fact, the third purpose is what? You should use this property, plant and equipment for more than 1 year. Obviously, if you want to call it as PP, it should last in your business for more than 1 year or 12 months. Okay. Now, if he is dealing this, suppose a particular real estate guy, if he is buying and selling land, then that land is fixed asset for him or it becomes your goods. Then it becomes his inventory. You cannot treat it as fixed asset. You will have to apply accounting standard 2 and treat it as inventory. Rental purpose means those fixed assets which have been let out, like building. You have some spare building, you have let it out and earning some rental income from it. You are getting some rental income from it. So that means that rental property, that rental building also will come under the scope of accounting standard 10. Holding period is irrelevant. Holding period is irrelevant. All the things has to be considered over there. Okay. Because for real estate guy, operating cycle will not be 12 months. We'll cover that later. There's a small concept of operating cycle. Anything which comes within operating cycle is your current assets. We'll come to that little later. Maybe in preparation of financial statements, maybe we'll cover that concept. Okay. But yes, to answer your question now, it is inventory. It is not fixed assets. In the further topics, all that will come. So far, everybody good? Again, once quick recap again. All this you need to remember. So PPE ka definition is what, sir? One, it should be a tangible asset. It should be held for use. That usage could be either to produce goods or rendering service or administrative purpose or rental purpose. And the usage should be for more than 1 year. Okay. This is the PPE ka meaning. But if you want to show PPE in your balance sheet, there are 2 recognition criteria. If you want to show PPE in balance sheet, there are 2 recognition criteria. If you want to call it as PP, there are 3 characteristics. But if you want to show that PP in balance sheet, no, there are 2 more recognition criteria. That means in totality, how many is there? 5. 3 are the features of PP. And to show PP in balance sheet, you have to have 2 more recognition criteria. One is FEB. FEB as in future economic benefits. Meaning, so logically you think, sir, if we purchase laptop, mic, etc., etc., just like that, or are we going to invest or do we expect some benefit out of it? If at all we feel there is a benefit from it, that's the reason we will invest. Yes or no? That is what this criteria says. So if you want to show PP in balance sheet, no, because of that PP, some benefit should flow to the entity. Meaning entity should get some benefit. It's not necessary benefit should already be received. If entity feels they will receive the benefit in future, that is also fine. If you are already receiving benefit from the asset, that is all right. But if you feel you will get the benefit in future, that's also absolutely okay. So that is your first criteria, which is future economic benefits. Who should get it? Entity. And 2, cost of that fixed asset or PP, you should be able to measure it reliably. Meaning how much you spent for that PP, you should be able to tell it clearly. That is not a crux for AS10. For intangible asset, cost could be a little bit of a problem, which I'll take. Okay. All right. So these are the 5 characteristics of PP. Okay. Recognition criteria is what? FEB and cost measurement. FEB means the entity should get some benefit because of that asset, and 2, cost of the asset should be able to measure it reliably. Now everyone got the PP meaning and its RC as a recognition criteria. Let's come back to that example. Now you tell me the right or wrong answer for Wipro for this particular things. Ambulance. Sir, is Wipro using ambulance? Wipro maybe, let's say it's a software division of Wipro that this particular guy got placed in. Is ambulance used to provide any software? Can you can you work from ambulance and generate codes and things like that for software? No. But are they necessary for administrative purpose? Very much yes. That means all these are what, sir? Is it PP? Right or wrong answer I'm writing over here. Is it a property, plant and equipment? Yes. What about lift? Is it a property, plant and equipment? Yes. Furniture? Yes. Centralized AC? Yes. Gym, room and painting are also for your administrative purpose, because if you have an office, sir, there will be certain aesthetic assets. To decorate the building, obviously you will have some assets like what, all this painting and all. Obviously, because see, sir, if it's an MNC, they can't keep it khali. They need to have all this, massage chairs or all this extra the features they give, so that employees will feel little good. Correct? No? Because when you go to that office feeling should be there. It should not feel like KR Market. Yes or no? Right? You should have that pleasant feeling. So to generate that vibe, all these assets are generally purchased. So are they getting any direct? Are they used for providing goods or service? No. But they use for what purpose? Administrative purpose. So even gym, room, painting are also what, sir? In fact, all of them are here what? Property, plant and equipment. Easy, sir. In fact, majority of them are administrative assets. Painting is not for operations. What do you operate there? You just buy the painting and this thing. These are for all your aesthetics, that's all. All your aesthetic assets or decorative assets are also comes under the administrative category. Okay, can I move forward? All right, one moment. Let's see how well you have understood. I'll give you a small example. Our hitman Rohit Sharma is batting beautifully. Correct? No. Yeah, beautifully. Yeah. So BCCI got excited. Sir, let's say Rohit Sharma, no? I think he plays for Mumbai Indians, right? MI. Okay. For Mumbai Indians, let's say he got a bidding of 15 crore rupees. His bidding price was 15 crore rupees every year to play IPL. I don't know the amount, I'm just assuming it. Okay? Alright. So 15 crore rupees is his value. Sir, BCCI got excited and they said they will show Rohit Sharma as property, plant and equipment in their books. They will show Rohit Sharma as a property, plant and equipment in their books. Okay. Alright. Now look at the definition and tell me. Now you know the definition. What is the definition of PP? One, it should be a tangible asset. Can you see Rohit Sharma? I can. Can you? So is it a tangible asset? Yes. Second one, held for use. Usage could be either to produce goods, no, rendering a service. Obviously, what he is giving is a service to the nation. Correct? No. So he is used for to give a service to the nation. So that means service criteria is getting satisfied. Third one, usage for more than 1 year, which obviously is the case. He's been playing for quite some time. He's probably expected to play for more than 12 months also expected. That means PP ka definition is getting satisfied. Any doubt there? What is the recognition criteria? Feb and cost measurement. Sir, due to Rohit Sharma, obviously you're getting a huge benefit. Yes or no? He's obviously putting the nation or the whatever is franchisee on the forefront. Obviously, correct? No, so that means obviously due to Rohit Sharma, BCCI is tremendously getting benefit. Good captaincy, amazing batting and all that. So definitely benefit is there. Okay. Cost also can be measured reliably, which is 50. Okay. Or if BCCI, let's say, is paying Rohit Sharma 5 crore rupees as fees every year, cost is also how much in that case? 5 crore. That means it looks like all the criteria is getting satisfied. Can we show? You should not watch YouTube lecture and all on Kampa. Yeah. Okay, saying I watched it, sir. I'll tell you the answer, sir. Okay. Well done. I have uploaded this, huh? Maybe, I don't know. I'm not sure. Okay, yeah, come back to this, sir. Tell me, others, tell me. Is it a property, plant and equipment or not a property, plant and equipment? Answer is, it is not a property, plant and equipment. Yes. Why? Huh? Animal today. You made Rohit Sharma animal today. He took that Kannada dialogue very seriously. Manganinda Manava. You made him Manga only. No. He's not an animal or plant, macha. Yeah, he's a. uh, the reason is the first one, tangible asset. You'll have to go back to asset ka definition. Sir, if you want to call something as asset, no, it should be within your control. If you want to call a component as an asset, it should be within your control, from which you should get all the benefits and restrict others from getting the benefits. Like, if I have 500 rupees ka Gandhi note in my wallet, is that 500 rupees Gandhi note my asset? Is that cash my asset? Yes, because it is within my control. I can do whatever I wanted with it. I can use that 500 and buy something. Or I can, if I'm crazy, I can tear it off. I'll not do it, just say. Yeah, but it is within my control. Yes or no? And will I get all the benefits from it? Yeah, I can use it and get all the benefits. Can I restrict you from taking that? Yes, if you want to take that, I can say, no, boss, it is mine. So that means I can restrict you from taking it or restrict others from getting the benefits. That we call it as what? Asset. If you want to call something as an asset, one, it should be within your control, from which you should get all the benefits and restrict others from getting the benefits. But sir, human beings, we don't show it as an asset. If you observe any top companies, in fact, the biggest asset of every company is their manpower. Yes or no? Every company will survive only because of their manpower. Like Ratan Tata is not a property, plant and equipment for Tata Limited. Same like Mukesh Ambani is not a fixed asset or property, plant and equipment for Reliance Group, because of this aspect, which is control. Like here, can BCCI tell Rohit Sharma you become a left-handed batsman or left-handed cinnamon bowler, or you become a wicket keeper? And moreover, if Rohit Sharma wants tomorrow, can he retire? Yes. So is Rohit Sharma within BCCI ka control? Human beings are not within anybody's control. That is the reason we say human beings are not. That's the reason we don't show human beings as an asset. Okay, people. So somebody is saying, sir, we have a contract for 10 years, sir. CSK has a contract with Dhoni for 10 years, sir. Now they can control, sir. Can you see it? No, you can't control Dhoni. Yes, if you have a contract, right, you can enforce Dhoni to play for you. For how many years? 10 years. That contract becomes your intangible assets. That contract is an intangible asset. So IPL and all, no, when they have player rights, that player rights, they will show it as an intangible asset. They can't show player as an asset. Player rights, they will show it as intangible asset. Like that. Okay? Because over the player, you don't have the control. Fine? So human beings are not recorded as an asset in any company ka books, period. Yes, if you have a contract with them, that contract you will show it as an, all brand ambassadors ka contract, whatever you have, you can show it as an intangible asset. Correct. What if uncertainty happens means? What uncertainty? Go in there. What if uncertainty meaning, ma? I didn't understand. What is that uncertainty there? Okay, rephrase that. In case of contracts. Now, if contract gets cancelled, there will be penalty clause. If you had a contract for 5 years, then you will show that contract as an intangible asset for 5 years. If suppose after second year, if contract get cancelled, then intangible asset also will be cancelled. That's all. That's all. Whatever you have done, cancel it. That's okay, people. Now did we understand? Now we have a more clarity over the PP, its recognition criteria, blah, 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 blah. Okay, come back to the next one. We'll see one. We'll go one by one. Okay, this term, bearer plant. Are we comfortable? Did we hear this term somewhere? AS10 is not applicable for biological assets. Biological assets means living plants and animals. Okay. But for bearer plant, is it applicable? Yes. I mean, we need to understand now what is a bearer plant. Can we understand this? So if you want to call a plant as a bearer plant, no, it should satisfy 3 criteria. All the 3. It should satisfy 3 criteria. All the 3 criteria. 1, it must be used in the production or supply of agricultural produce. It must be used in the production or supply of agricultural produce. it must bear the produce for more than 12 months. Once I'll read it out, then we'll spend a minute on that. 3, it has a remote likelihood of being sold as agricultural produce except for incidental scrap sale. Full bounce or stuff. That is highlight of our classes. What are they trying to say is, one by one we'll decode, no problem. Sir, let's take an example of a mango tree or apple tree, whatever tree. Mango is better, huh? Okay. Mango season coming, went already. Another next April only, I think. Normally in summer it turns up, right? I think now it's apple season only, I think. Yeah, November, December, May, I think apple season comes. Okay, no problem. Still, you wanted mango, we'll go for mango. Okay. Sir, one. A farmer is there. He has grown a mango tree. He's put in the mango seeds and he's got a mango tree. We are trying to test whether this mango tree is a BP, as in bearer plant. First criteria that if you want to call something as a bearer plant means it must be used in the production or supply of agricultural produce. Meaning from this particular mango tree, no sir, you should get some agricultural produce. Are you getting any agricultural produce from mango tree? For mango tree, what will you get, sir? Mango. Yes, no, mango is obviously an agri produce. That is the first criteria. From apple, watermelon. What is that? In hybrid zamane mein anything can happen, no? Yeah, these days we're getting weird things. Okay. So one, we got the first criteria. If you want to call it as bearer plant, that bearer plant should be used in the production or supply of what, sir? Agricultural produce. Meaning from that bearer plant, you should get some agri produce. Which in this case, you are getting mango. Okay. Second, it should bear the produce for more than 12 months. Sir, once if you plant a mango tree, okay, once if you have a mango tree, will it give you mangoes only for 1 year or more than 1 year? Generally, mango tree, apple tree, etc., this vineyards, etc., vineyard, etc., they bear the produce for how many months? More than 12 months, maybe 5 years, 10 years. I'm not an agricultural expert, so I have no idea how many years it will sustain, but definitely more than 1. Yes or no? That means you will get this mango for more than 1 year. That is the second criteria. Because the very definition of PP says, if you want to call it as PP, it should be used for more than 12 months. So even this mango tree should give you the produce for more than 1 year or 12 months. Can I go for the last one? Is it making sense now? The 1 and the 2 criteria? Can I go for the last one, people? Third one, once I'll read it out, they should have a remote likelihood of being sold as agricultural produce except for incidental scrap sale. Meaning, let's say there is a farmer. You know what he does? He will grow the mango tree for a particular year. Okay. And from that mango tree, he will get mangoes. Once he gets the mangoes, he'll collect all the mangoes. Once all the mangoes he has plucked out of the mango tree, he'll cut off the tree and he will sell that tree to the timber industry. That is his business. Every year he does this. Grow the mango tree, get the mangoes and sell the mangoes. After he has collected all the mangoes, even mango tree also he will cut it off and sell that wood to the timber or the furniture industry. That is his business. That should not happen is what third criteria is trying to say. Sir, if we have purchased a machinery, a laptop, furniture, will we sell it regularly or will we use it? Yes or no? We will only sell it only when it has become a scrap. When it has reached its end of useful life, then what we will do? Sell it off and replace it with a new one. Yes or no? That is what they are trying to say. It should not be sold as an agriculture produce, meaning that tree itself should not be sold as what? Agriculture produce. Except for what? Scrap seeds. Maybe if the tree has become old. Okay, if it is not giving you the desired quality mangoes. Okay, it is giving like, let's say, obviously once it becomes sick, it will not produce the quality mangoes. In that case, what do you think farmer will do? Cut off that tree and plant a new one. In that circumstance, you can sell it. But as a regular routine business, you should not sell. Routinely, if you are selling means that bearer plant, no sir. If you are routinely selling in your day-to-day business, that means that is what? Is it a property, plant and equipment or inventory? If you are routinely selling this plant means then it becomes your inventory. So you can't treat it as what? property, plant and equipment, and apply AS 10. That is what 3 conditions are trying to specify. Now, is it better or still bitter? Better? Everyone okay? Once more, what are the 3 criteria? First one is, it must be used in the production or supply of agricultural produce, meaning from the plant you should get some agri produce. Second one, you should get the produce for more than 12 months. 3, the tree itself, you should not sell it routinely. As part of your everyday business, you should not be selling the tree. Okay, but that doesn't mean you cannot sell it at all. No, you can sell it as a scrap. If the tree has become old, etc., then you can sell it and replace it with a new one as a scrap. Scrap sale is permitted, but routine sale is not. So if all these criteria are satisfied, then it will become a bearer plant. And if it is a bearer plant, accounting standard will apply. That's all, G. Correct. You can sell the mango. Agricultural produce you can sell. Mangoes you can sell it as part of your day-to-day operations. That is fine. Tree itself you cannot sell it regularly. Correct. That statement is right. Huh? Come again, sir? Standalone tree. Sandalwood tree. I mean, if your business is, obviously you grow a sandalwood tree to get some sandalwood. Right? After the tree is done, you cut it off and you sell it. That means that is your inventory. It is not your bearer plant. For that matter, even bamboo tree. You grow it and you cut it off and then sell it. So that means all those are not bearer plants for AS10 purpose. They become inventory, and AS2 has to apply to all of them. Can we go on to the next talk? Okay, let's do one thing. Let's do a couple of questions and then maybe come to the balance. Now we are comfortable with all the basic concept that we have seen. Like this one concept, we'll keep learning and do some few questions. Bearer plant cost may be a little bit of a problem. Correct. Yes, cost may be an idea. Agree. If you're not able to identify cost, you cannot say. Some question is, sir, how do you identify bearer plant ka cost? Okay. So if you are able to identify, because normally all this tree, you just need to plant a seed. Automatically it will cultivate. If there is no cost, that means you cannot show it. Okay. If you can't ascertain the cost, you cannot show it. Why not? If you are able to ascertain it, show it. That's what the standard says there. Suppose you purchased a bearer plant. Possible that you can also purchase it. No? Tree was already there. We purchased it. Now we are maintaining those trees and selling the mangoes. In that case, you can ascertain the cost. You know, mango farming, they say, no, all this coconut, many people do this, no? Coconut, what do they call it as? Farm. Yeah, no, okay. So, if you are able to ascertain the cost, show it. Otherwise, not required. No, the person who is maintaining and all, who's watering the plants and all, no, they becomes your operating expenditure. They goes off to P&L. We'll come to that. Hang on. There are some cutoff conditions also here. We'll come to that. We have not gone to that concept yet. Hold on. Once I discuss that concept, I think your doubt will be automatically clarified. Okay, check this, people. Entity A, a supermarket chain, is renovating one of its major stores. The store will have more available space in store promotion outlets after the renovation, and it will include a restaurant. Management is preparing a budget and after the store reopens, which includes the cost of remodeling and expectation of 15% increase in sales resulting from store renovation. Underline that. A 15% increase in sales resulting from the store renovation, which will attract new customers. Whether remodeling cost can you capitalize is what they are asking. You have done some remodeling. Okay, maybe like the shelf, etc., etc. Normally, you'll have supermarkets and all. They probably inserted or put in some shelves, etc., etc. Because of remodeling, they are saying, will you get some benefit? Yes. How much percent benefit? 15% increase in sale. Go back to it. 1. If you want to call it as PP1, it should be a tangible asset. Can you see it? Yes. Second one, used in the production of goods or rendering a service. Here you're using the supermarket to sell your goods. It should be used for more than 12 months. Obviously, sir, supermarket chain is also a building. Will the building last for more than 1 year generally? Yes. So is all the characteristic of PP getting satisfied? Yes. That's all? No. PP ka, if you want to call it as PP, there are 3 criteria. But if you want to show PP in the balance sheet, there are 2 more recognition criteria. What are the 2 recognition criteria? Future economic benefits and cost measurement. Due to this renovation, are you or is the company getting some future economic benefits? Yes. They're saying there is a 15% expected increase in sale. That means there is some benefit. You're doing remodeling means, won't you know the cost of remodeling? So cost also is measured reliably. So can you capitalize this? Very much yes, that is the answer. So how will you write the answer? One, you will write PPE ka definition. Then you will write, or and in fact, generally all this can come maximum for 2 marks. Can I give you the direct answer? First, I'll maybe write, if it comes for more marks, you write PPE ka definition. That you know of, no? Just we discussed in the chart there. First, you write PPE ka definition. Then, as per accounting standard 10, recognition criteria for property, plant and equipment is, recognition criteria for property, plant and equipment are, 1, what is the first recognition criteria, sir? Future economic benefit. Future economic benefit, that for class purpose we are calling it as FEB, is expected to flow to entity. Is expected to flow to entity from what? From that property, plant and from that PP. And what? Cost of PP is measured reliably. Cost of PP is measured reliably. The conclusion is what here? In fact, we can write the present case also, or we can write the conclusion along with that. In the present case, comma, due to remodeling, there is an expected benefit of, there is expected benefit of 15% increase in sales. Therefore, what? These costs are transferred to P&L or capitalized? Therefore, these costs are capitalized, meaning they are added to the cost of PP. Interesting so far? Only few people, others it become interesting when you end the class. Huh? That is not interesting. Oh my god, you will get beatings today. See, already that side where look is coming in. Which guy is that? Let's mark him. Finish copying? Yeah, right. Somebody is putting full better. You want faculty like you in all subject ante. He'll give this dialogue to every faculty, I think, no? So that he will give more break and probably leave the class early. Yeah. If you are really liking it, honored. Thank you. I'll try to keep up. Anyways, can I come back to the concept now? Everything done, not done, no? If you enjoy these kind of things, then you'll enjoy CA final syllabus a lot more. Because the whole syllabus is like this in CA final. Matlab case study based. Everything is. Okay, come back to that now. Too much information, they will drift off. Okay, coming back. Spare parts and standby equipment. So, sir, like let's say ArivuPro. We do have a generator. an inverter? Will we use it routinely or only if Karnataka government takes pity on us? Obviously, I mean, if there is a power cut, then only we will use it. Yes or no? That means they are all what, sir? Standby equipments. Generator, inverters, etc. We will only use in case of power cuts or in case of emergency. So if a company has purchased these standby equipments, is it property, plant and equipment? Was the concept or what is the question? Okay. Now check, sir. What the standard AS10 says is, if recognition criteria is met, then these assets are also property, plant and equipment. Else you will show it as inventory. A clarification given on this regard. You disclose it as, you have to show it. If you can't show it as PP, you have to show it somewhere. They are asking you to categorize them as an inventory. Not that you sell them, but just a clarification given with respect to this. Okay. What is recognition criteria, sir? Just now we learned. Because of these components, there must be some FEB. FEB as in future economic benefits into cost of the asset to be able to measure it reliably. Now tell, because of that inverter or generator, will the academy get any benefits? If there is power cut, without that generator, can we continue the class or is it a must? It's a must. I mean, is there any benefit expected out of that inverter or generator? Very much yes. So FEB, is it getting satisfied? Yes. Cost also. If we are buying means, won't we know how much we will spend to buy it? So cost is also measured reliably. So if RC as in recognition criteria is met, you will classify it as what, sir? PP. Else you will show it as inventory. Easy. Once more, got it. Yeah, even fire extinguisher, etc. Yes. Provided that should last also for more than 12 months, which generally is. Which generally will be. Oh. Can I move on to the next concept now? Okay, an interesting one. Check this. Replacement of parts. It's a common concept. This concept holds good for replacement of part and major inspection. But now let's do a thing. Let's take up replacement of parts. This is not tested much in CA intermediate, but it will be tested in a big way in CA final. So I'll explain it to you so that you get that proper background. So I mean, you can carry it forward. Check this. Let's say, sir, I have purchased an electric car. Okay. And let's say I've paid about 20 lakh rupees for this car. I was told at the time of purchase, this car will last for 10 years. The car will last for 10 years. Residual value is 0. Sir. Residual value is 0. Can you tell me or can you calculate depreciation for me under straight line method? Can you calculate depreciation for me under straight line method? How much, sir? How did you calculate? 20 lakh minus salvage value, which is 0, divided by useful life, which is 10 years. So this becomes 2. That's how you've been done in your golden days. Depreciation also is a concept. It is there. It will get covered, but hang on. But all this we have done. Yes, this is pretty straightforward for us. Now, sir, this car, no, sir, has a battery. And I'm told, I'm the purchaser, I've been told that you have to replace the battery once in every 5 years. Car will last for 10 years. But battery of the car will only last for 5 years. Okay. And let's say of this 20 lakh, the battery cost, no, sir, is, let's say, 5 lakh rupees. I paid 20 lakh in totality, no? Of this 20 lakh, 5 lakh relates to battery, 15 lakh relates to the other parts, steering wheel, alloys, engine, whatever. Other part constitutes 15 lakh. Now, listen to my words carefully and tell the answer. Will you depreciate entire 20 lakh over 10 years? One option. Will you depreciate entire 20 lakh over 10 years, or 15 lakh you will depreciate over 10 years and 5 lakh you will depreciate over 5 years? Which option will you go for? This is option number 1. This is option number 2. Did we understand the question? The entire car value is 20 lakh and the total car will last for how many years? 10 years. So will you calculate depreciation like this as a totality, or will you go part by part? Part by part. Here I've given you 2 parts. One, 15 lakh relates to other parts ka value Another part will last for how many years? 10 years. There is no salvage value for either of them. And 5 lakh is the battery ka cost. Battery also has no salvage value, but battery ka life is only 5 years. Okay. The correct option is this. Someone told, I don't know. You tell. I paid fees. Yeah. Why should we answer everything? Yeah. Crazy guy, this guy. Everything he'll only learn from us and teach us only. Yeah. Okay. So option number 2 is the right answer. This, sir, we call it as, in AS terminology or Ind AS terminology, we call it as component accounting. Call it as what? Component accounting. Meaning, if different parts have different useful life, if different parts have different useful life, then you need to calculate depreciation also on them separately. Meaning, the depreciation will be on this will be how much, sir? 1.5. What is the depreciation on this? 1 lakh. That means the total depreciation you will book every year is 2.5. Did we understand? Sir, that does not mean you have to pass separate journal entry for 1.5, separate journal entry for 1 lakh. You can pass one journal entry. What is the journal entry for depreciation? Depreciation account debit. Let's say we are following charge method. That means directly you'll write depreciation account debit to electric car. So how much is the total depreciation? 2.5. You can pass one journal entry for depreciation, but calculation of the depreciation has to be done separately. That only we are referring to as what, sir? Component accounting. Did we understand this concept first, people? Someone is saying you're not able to identify components only means what you'll do, sir? There's some workaround for it. There are about 3 questions in CA final for this. Not here. There's some workaround. We'll use annuity factor, discount factor, and we have to rework. There's a backward working for it. Considering larger audience and picture, not required. We will do it. Such problems are there, but relevant for CA final. You can find out. Even if you don't know the cost, there is a method to work backwards and find it. Leave that. Can we leave it like that? You are a little ahead, bacha. That's all. Okay, that is one. This is the first part. Okay, listen to this now. Now, sir, when I bought the car, what did they say? What did I get to know? That battery ka life is only 5 years. Other part will last for 10 years. And we learned that if different components have different useful life, we need to calculate depreciation also separate. We can pass one journal entry for depreciation, but calculation has to be separate. Now I'm building this further. Check this. Let's say, sir, after 2 years, Vastu problem, I don't know, Hane Bara, fate. After 2 years, battery damar, sir. Battery damaged. Damaged. Battery got damaged. Okay, 1 second, hang on. After when did this happen? After 2 years. Sir, how much? What is the original cost of the battery? 5 lakh rupees. You are depreciating battery over how many years, sir? 5 years. That means every year, how much depreciation you're calculating for battery? 5 lakh minus its salvage value, which is 0, divided by its useful life, which is 5 years. So you're getting towards battery, you're getting depreciation every year to the extent of 1 lakh. How many years over? 2 years. Can you tell me what is the total depreciation you have charged towards battery? 1 lakh you're charging every year. All this drama happened after 2 years. So you have charged 2 lakh rupees depre. Any doubt till here? Online? Offline, online, whatever line? No. So can you tell me what is the carrying amount or book value relating to this battery alone? I don't want it for the entire car. Only for battery, what is the carrying amount remaining? 3 lakh rupees. Easy. Sir, since this old battery has got damaged now, what should I do? Have to replace. Okay. So let's say at 3rd year beginning, I purchased a new battery. I replaced it with new battery. Let's say new battery ka cost now has become 7. Obviously, due to inflation, cost will go on increasing. 2 years back, its value was, the battery ka value was 5 lakh. Now its price has become 7. It could increase, decrease, whatever. I've assumed it as increase and it has become 7. Now, check, sir. This new battery ka cost, this 7 lakh rupees, should I transfer it to P&L or should I add it to the cost of car? What should I do for this 7 lakh? Transfer it to P&L or add it to the cost of car? Is car there or car also gone? Car is still there. So should we capitalize or P&L is what my question. So what AS10 says is, if you are, this is the concept that we are referring to here as what? Replacement of parts. Getting back? So if you are replacing not the whole asset, if you are replacing any of its part, then can you add a new part ka cost? Yes. You can capitalize the new part. You can capitalize the new battery ka cost provided RC is met. What is RC? Recognition criteria. What is that recognition criteria? Feb and cost. If due to this new battery, if you are expecting to get some future economic benefits, and cost also is measured reliably, in that case you can capitalize. Otherwise, no. Otherwise, it will be transferred off to P&L. Okay, sir. So obviously, if you are replacing a battery, means your car will function a lot more smoothly now. So there is obviously benefit expected. Yes, no, sir. So what will you do for this battery ka cost now? Well, everyone understood? Need a minute? That is not the point I'm trying to address here. New part, yes, it is meeting the recognition criteria, so you have added. What about the book value of old battery? What is the book value of old battery? Is it still there or that old battery is removed? Sir, old battery, is it still in the car or removed? Removed. That means what the standard says is, carrying amount of old part, if it is still remaining, you de-recognize, meaning you cancel. 7 lakh you add, we have absolutely no problem with that. But is this 3 lakh ka old battery, it is still part of your car? Is that old battery there or gone? That means what should we do for this 3 lakh? This we need to reduce it from what? Car ka value. This is your replacement part ka concept. Basically new part. If you have to sum it up in one line, this is nothing but if you're replacing any new part. New part ka cost, can you capitalize? Yes, provided recognition criteria is met. So add a new cost, that's fine. But if you have any book value of the old part still remaining, then what you know? That you need to cancel. Easy, people. So this 3 lakh, you will reduce it from the cost of car, and this 7 lakh, you will add it to the cost of car. And then accordingly do your depreciation calculations going forward. That is the concept. We don't have numerical questions around this, I think, here, but you have such questions as you proceed along. It may be bought in also, so I thought I'll discuss with you. Yes, people. Any doubts or proceed? Which one, sir? Huh? 3 lakh we will? Oh, this 3 lakh. He's saying what journal entry will pass. Yes, sir. You'll directly pass P&L account debit to car account. 3 lakh? 3 lakh. Correct. No, you don't have to deduct it from new cost. It's all right. You add 7 lakh separately, reduce 3 lakh separately. You can treat this as two separate economic events. Impact will be finally in which way same, but show it separate. That's all. No. Some is saying, sir, you write P&L account to car battery. No, sir. No. We will not maintain, sir. We will not maintain the ledger account component wise because practical problem. If you consider huge machineries, they will have thousands of parts. One asset can have hundreds of parts. That means we'll maintain hundreds of ledger. We will maintain only one ledger. That is main asset ka ledger. What is the main asset here? Car. So you'll directly credit car account. Calculate depreciation component wise. All this you can do it in your Excel. But accounting ledger wise and all becomes very difficult. So we don't do it. Okay. Because you are not using battery. You are using a holistic component called a car. So show car as a component in your financial statement. Not as a battery. Fine, no? Okay. Suppose, okay, let me take this one step further. Suppose you replace battery only after 5 years. This time Vastu is good. Battery lasted for how many years? 5 years. Now can you tell me what was the original cost of battery, sir? Originally 5 lakh was included. What was its useful life? 5 years. What is the depreciation on this battery every year? 5 lakh minus 0 divided by 5 years, which is 1 lakh per year. How many years did you use it? 5 years. So what is the total depre? Total depreciation is 1 lakh into 5, which is 5 lakh. Now can you tell me what is the book value of that battery at the end of 5th year? At the end of year 5, the book value of the battery is 0 because you bought it for 5 lakh and you have depreciated it for 5 lakh. Book value is only 0. Now if you replace new battery, is there any extra drama? So new battery ka cost can you add? Yes. But old battery ka book value should you eliminate or nothing is there to eliminate? Nothing is there to eliminate. So if book value of old battery, if it is still remaining, then eliminate. If it's fully depreciated, no elimination required. That is this concept of. That's what I've written over here. Recognize as PP only if recognition criteria is met. Reduce the carrying amount of old parts or old inspection charges. Inspection charges is also same thing. Maybe 1 minute we'll spend on that also and go for it. All these questions are there. I don't know whether we have such questions. Doubtful. Okay, but nonetheless 2 minutes we'll spend it on. Sir, we call this as overhaul charges. Overhaul charges or inspection charges. Major inspection, or sometimes this is also referred to as overhaul charges. Sir, if you are especially operating in operating a ship or airline, like let's take an airline example. They are transporting people from one location to another. Yes, you have to be a little careful. Yes, no. Because if something happens, thousands of people or hundreds of people may lose their lives. So, and the people ka life is dependent on one asset called aircraft. Hence, authorities, no sir, will expect the airline industries to do some inspections regularly. Maybe once in 3 years, once in 5 years. This will be a thorough inspection, not just a routine inspection. This will be a thorough inspection and the charges also will be very high. Hence, what the standard says is, if you have undertaking any major inspection charges, that major inspection charges also you can capitalize it. Okay. Book value of old inspection charges you can eliminate. Generally, book value of old inspection charges will not arise. The reason being, okay, let's take an example like this. Let's say, sir, you purchased an aircraft for simplicity, I'm taking a smaller number. So 10 lakh rupees. Assumption is the aircraft ka value. So first time when you buy an aircraft, inspection and all would have already happened. Okay, let's say inspection charges here included is 1 lakh rupees. Meaning in this 10 lakh, 1 lakh rupees is related to inspection. Okay. Now sir, aircraft ka useful life is 20 years. Aircraft ka useful life is 20 years. But you have to get the inspection once every 5 years. Inspection every year, once you have to get it done in 5 years. Now you tell me, sir, will you calculate depreciation on this aircraft on 10 lakh for 20 years or will you separate? Meaning of this 10 lakh, 1 lakh is towards inspection. So this 1 lakh inspection charges ka you will calculate it separately. Others ka you will calculate depreciation separately. So what will be inspection ka depreciation? 1 lakh minus salvage value 0. You have to get the inspection once in how many years? I mean, what will be the depreciation related to inspection? 20,000 per annum, or maybe this one, let's make it as 10 years for simplicity. What is the other part ka or others ka value, sir? In this 10 lakh, if 1 lakh is towards inspection, balance will be towards others. Minus residual value, again I'm assuming it as 0. Divided by useful life. What is the useful life of other parts of aircraft? 10 years. What will be depreciation? 90,000 per annum. Any doubt? I've changed it to 10 years, but that's the reason I'm getting 90. Otherwise, yes, it will be 45, right? Clear? Inspection is not an asset, but for asset to function in the way, inspection is necessary. Okay. So that's the reason even this cost we shall capitalize. We'll come to that. That concept is also there. I've not yet reached. But look at this for the time being. So I have to get the inspection done once how many years? 5 years. Okay. Let's say 5 years over. Can you tell me what is the book value of old inspection charges? What is the book value of old inspection charges? Initially the inspection charges ka value was 1 lakh. How much depreciation am I charging every year towards inspection? 20,000. How many years over? 5 years. That means what is the book value of inspection charges remaining? Is inspection charges a separate account or it is part of aircraft only? Part of aircraft. So how much is the book value of old inspection charges remaining? 0. That means, is there any necessity to de-recognize book value like old part? No, because all this inspection and all, no, you will conduct it before or after 5 years. After 5 years. That means old inspection charges ka value would have all fully depreciated. Now at the beginning of year 6, if you do any inspection charges, let's say by incurring 2 lakh rupees, because every 5 years you have to get it done, no? So at the beginning of 6th year, again if you do inspection charges for by incurring how much? 2 lakh. What will you do for this 2 lakh? Add it to cost of aircraft, meaning you can capitalize this. Because all these are major expenses, okay, major overall charges, you can capitalize, because obviously there are some tremendous benefits because of all this also. Because unless you do all this, will people fly with you? All these are necessary criteria. So there will be some benefits due to this, and cost also can be measured reliably. So basically, what am I indirectly saying is, for all this, RC will be met, meaning recognition criteria will be met. So new inspection charges ka value you add book value of old inspection charges. If at all it is remaining, what you will do? De-recognize. That is what I've written over here. Any doubts? I don't see any questions, but if it comes, will you be able to tackle now? We have given with numbers. Everybody. BMTC, nada? What? BMTC do. I don't know about BMTC ka inspection and all much. Okay. Yes, I believe I can proceed now. Okay, this is important for examination. Look at this. So for inventory, we saw inventory should be measured at cost or NRV, whichever is lower. Let's have a quick recap. What are the components of cost for inventory? Purchase cost. If there is any trade duty, if there is any non-refundable taxes used to add. Trade discount or rebate you need to reduce. Then conversion cost. Then any other cost incurred to bring the inventory to present location and sellable condition. Concept is little similar for PP also. Look at this. Initial recognition of PP. So initially all property, plant and equipment will be recognized at cost. And the cost for this purpose are 3 types. Cost for PP purpose are 3 components. One is your purchase. Purchase cost, can you add it to the cost of PP? Very much yes. That's your major cost. No? Can you add purchase cost? Yes. If there is any import duty or any other non-refundable taxes, what you will do? Add. If there is any trade discount, what you will do? Minus. Is this any different or same as inventory? This components are ditto. Can I go for next to? So for inventory, we use the term any cost incurred to bring the inventory to present location and condition. Here we call that as DAC. Here we call that as a DAC. DAC means directly attributable cost. If there is any directly attributable cost incurred, then even such DAC can be capitalized. I'll give you a small example for this. Check. You can understand DAC better maybe with the help of that. Sir, our Cipla company, a pharmaceutical company. Medicines, no? Yeah. All right, sir. Sir, Cipla, sir, want to manufacture a tablet or a syrup which can cure fever. That is their main goal. They want to produce a tablet which can cure fever. Oh, okay. Now, sir, Cipla company, no? So they purchased a machinery. They imported a plant and machinery from Japan for 100 crore rupees. It's a big machinery. They've imported this from Japan and the purchase cost is how much? 100 crore. I'll give you a list of cost here. All you need to tell me is, can you add it to the cost of PP, or will you basically capitalize this, or will you transfer it to P&L? List of cost. 100 crore rupees purchase cost. Can you add it to cost of PP? PP or P&L? That you tell me. Where? PP, yeah. Okay. Next, sir. Sir, this machinery has to come from Japan. So obviously there is some transportation cost involved. So let's say there is a transportation cost of 5 crore rupees. Freight or transportation cost, whatever. What will you do for this transportation cost? P&L or add it to cost of PP? Add it to the cost of PP. Sir, it's a big property, plant and equipment. So you can't send it off in one go. It has to be sent in part by part. They send it in many boxes. Okay, so that means we have to assemble them. So I incurred some assembly. It came in part by part, and I had to hire some engineers who had the expertise in this assembly, and I had to pay them some assembly charges of, let's say, 1 crore rupees. Amount is all right. What what about this 1 crore? Capitalize off. 100% sure of. Okay, sir. All right. So till here, are we good? Same example. While the assembly was happening, you know that person was sipping tea. She's still sipping tea. Receptionist ka salary. Chai wali, right? Let's say we are paying receptionist a salary of 50,000 rupees per month. Can you add a receptionist ka salary to the cost of PP, or should it go to P&L? Okay, this goes to P&L. Done. Alright. Sir, what is the intention of Cipla to buy this machinery? Use this machinery to produce a tablet which cures fever. Sir, obviously you started using this machinery. So you produced a tablet also. That tablet straight away you can sell it to public, or first you need to test it? First you need to test. You can't test on human beings, unfortunately. You can test it on animals. How far that is correct, debatable. Okay, leave that. Let's not go senti on that. Yes. Okay. So Cipla has done some testing. There is a testing charges they incurred to the extent of 20 lakh rupees. To see whether this particular tablet is able to cure fever or not, they did some testing. Okay, they hired some scientists, they put in some chemicals. Ultimately, they produced a tablet by incurring a cost of how much? 20 lakh rupees. And the test ka result is fail, sir. Test ka result is fail, meaning the tablet is not curing fever. It is like our class is giving headache. Okay, it is giving the headache. Now you tell, oh, this testing charges, so capitalize a P&L. Capitalize a P&L. That's why no response. That's why already headache and so gaya kya? Yeah. So popular answer I will take. P&L is what loudly I'm hearing, so I'll take P&L for the time. Okay, fine, sir. So testing charges 1 is a failure. Do you think Cipla will stop there, or they will continue more further testing? They changed. They brought in some new scientists, new people. They changed the composition of chemicals, etc., etc. They did. And let's say they did a testing charges number 2. They did a second testing, and this time around they incurred about 50 lakh, and this time the test ka result is pass. Meaning ultimately they did produce a tablet which is actually curing fever. So test ka result is pass. Now you tell what? PPA or P&L? Capitalize P&L. I'll take online ka answer. Online ka popular answer is P&L, so I'll take that. Okay. Sir, after the tablet is produced, what do you think Cipla will do? They'll sell, produce more, and then they will sell. To sell, they have some salesmen, and they pay a salesman commission of, let's say, 30 lakh rupees. Salesman commission, can I add it to cost of PP or P&L? P&L. All these things, no, standard tries to answer by one-liner called DAC. The answer for all this scenario, standard is trying to answer by defining something called DAC. DAC means what? Directly attributable cost. What AS10 says is, any directly attributable cost incurred to bring the PP to the present location. Any directly attributable cost which the company has incurred to bring that PP to the present location, that is your factory, and management intended condition. Management intended condition, meaning check. First, what is the intention of Cipla to buy this machinery? So that they can use this machinery, and from this machinery they should be able to produce a tablet which can cure fever. So the cutoff window is fever curing stage. Till that fever curing stage has reached, any related cost that you have incurred on this PPE can be capitalized. So you don't have to go example by example. It is just the definition of DAC. Any cost incurred to PPE to bring it to the present location and to, sir, inventory, no, you sold it. Hence they use the term sellable condition. For PPE, will you sell it or will you use it? Who will use it? Management. How? The way they want it. Hence the term this is present location and management intended condition. Till the management wants to use it, till that stage is reached, that becomes your cutoff. Beyond that, if you are incurring any cost, it will go off to P&L. Till that stage, whatever cost you are incurring goes off to or will be capitalized. Come back to this example and write the right answer. Can you add purchase cost, sir? Very much yes. Because unless you purchase, will it come to your factory and can you use it? And transportation cost, can you add? Yes. Because unless you incur transportation cost, will it come to your factory? No. Assembly charges? Yeah. Asset may have come inside the factory, but it's one. What is the cutoff window? Present location and management intended condition. Unless you assemble them, can management use it? Only after assembly they can use it. Correct? No. So is this necessary? Yes. What about receptionist ka salary? Sir, they use the word directly related cost or directly attributable cost. Is this a direct cost or this is a general cost? I mean, what will happen to this? This receptionist salary and all will go off to P&L. What about testing charges? Is this testing charges necessary? Yes. Only then you will be able to attain management intended condition. 1 minute. You incurred testing charges. But is that cutoff window reached or cutoff stage reached? What is that cutoff stage? Fever curing condition. Has the machinery able to produce a tablet which can cure fever at testing 1 stage? No. This testing was done related to machinery only. So is it a general cost or is it actually related to machinery? That means what will you do? Capitalize. When testing charges will be capitalized. Correct, people? Understood? Can I move on to the next one? Sir, testing 1 was a failure. Next, what did you do? You incurred testing charges 2. After you did testing number 2, what is the state of that machinery? It has reached the fever curing stage. That means what is the cutoff? After testing charges 2. That is your cutoff. So meaning even your testing charges 2 also shall be raised. And after incurring this, your cutoff stage is reached. Beyond this, if you are incurring any cost, all such cost will be transferred of where? Meaning salesman commission and all will go off to. That is what we mean by DAC. Did everybody understand this? Same as inventory, you just have to substitute with a new word. Present location, and instead of sellable condition, here it is management intended usable condition. Also you can write, or management intended condition. Like, need a minute or okay. Which one? No, the intention of, see, you will be able to get the medicine only from machinery, right? So you'll have to use the machinery in a particular way, then only you will get it. No?
But machinery is only used for mass production, right? Before that, they will produce the sample.
Correct. Correct. So that's what? Sorry?
All those are R&D.
Correct. R&D you can capitalize. See, this is the, unless you test them, will you know how the machinery is functioning? No. For you to come to that stage where how the machinery has to be. I'm not talking about technology. See, I'm not talking about composition. Yes, to produce a tablet, you need to bring in a certain chemicals in a certain way. That you get a patented over. Patent is an intangible asset. We're not talking that. But to test all this, we'll hire some laborer, the scientists, etc., etc. Those costs which you have incurred related to machinery, you can capitalize is what I'm trying to say. Same goes for that. Same goes. It again depends. Like if you have multiple machineries, if each of them are capable of independently used, it depends on how well it is integrated. Okay. So if it is so complex that they are used as one, you can account it as one. Otherwise, treat it separate. That depends. You need to have more facts there. So the testing charges is to condition machinery to produce the medicine, so it is capitalized. Yes. To know whether asset is functioning the way management wants it, this becomes necessary. Hence, it is capitalized. Okay. Yes. Initial insurance charges that you pay for machinery can be capitalized. Initial charges. For importing, should I pay some corruption? What corruption? Hey, bribe. Hey. If at all you're paying all that, P&L. and all. How can you phrase a law like that? Corruption charges, bribery, can you capitalize like that? Any standard will tell, ada. Okay. Yes. Everyone okay? Break. Break. Oh. 1 minute. So this is done. 1 minute, hang on, people. I just complete of these two, maybe another 10 minutes. Then we can go for questions directly. Would you be okay? Another 10 minutes? 10 nimisham. Right. Next. So far we saw what and all can be capitalized, the purchase cost and DAC. And the next one is DSR. Again, we don't have questions based on this. Tested again in CA final level. In India is 37 as well as India is 60. For now, I'll just tell you the meaning of it. Okay. For now, don't have to. Just know the meaning, that is good enough. The DSR ka full form is decommissioning and site restoration cost. I'll give you a small example. Check this. DSR cost. Even that can be capitalized. That's what I've written over here. Okay. Anyway, maybe I'll explain that and then we'll go further. Sir, our Geo Dana Dan. Most of us are using now Geo network. No. Okay, Guru. Whatever you're using. Let's not worry about that. Let's say Geo, no people. If you want to get a good signal, you need to have more and more telecom towers. The more and more telecom towers this particular company Jio installs, their broadband or their internet connection and their service connection will be better. Correct? No. Now, have you seen telecom tower on the road anywhere? Like electric pole, just like that, we'll put off one telecom tower and go, or just like that, dump it anywhere. No. Normally, telecom towers are put on the high-rise buildings, on the 10th floor, 5th floor, 8th floor, like this. They will fix it. Okay, that's the way it is. Because it has to catch up the signal. No? I don't know the technicals behind it, but it is normally put on the high-rise building. Don't ask questions on that. Why, how, and good. Yeah, I am not a tech expert in that. All right. So now, sir, Reliance Jio, sir, they want to install a telecom tower. Let's say the telecom tower ka value is 100 lakh rupees. Okay. They want to install this telecom tower on one of the buildings. They don't own that building. But obviously, because telecom tower means you will install it all over the city. So every building, though Mukesh Ambani can, he can't own. Yeah. Yes, because let's say others also own it. Others also should be able to give it up. No. Jio has found out, wants to install telecom tower in one of the building that they don't own. It's owned by somebody else. So Jio ka people approached this building ka owner and told, I would like to install the telecom tower on your building ka terrace. Owner asked, what's in it for me? I'll give you a rent of 1 lakh rupees every month. Nice business, no? Don't worry. They say there's a lot of radiation effect also because of this. So it's not a straightforward thing. Just don't go behind money. Okay. So building owner now is saying full happy. Because anyway, terrace he is not using. Yeah. That age is left for him. Okay. So he's not having parties and all. Okay. He's around say chilling. Okay. So terrace is anyway weekend. He told 1 lakh rupees extra income, definitely good. Owner out of curiosity asked, how many years will you install this telecom tower? Reliance told it will last, simplicity, it will last more, but just for simplicity, I'm going to take it as 5 years. Jio guys told that building owner it will last for 5 years. Building owner asked, after 5 years, what will happen? Nothing. Simply we will airlift the telecom tower. We'll uplift it off. Okay. Building owner asked, any damage to my building? Reliance people told, of course. Of course. Okay. Now, what do you think the building owner will tell? Now, what do you think building owner will tell? Boss, you incur the repair cost. Meaning, my building was pakka, it was good on. You unnecessarily did put some extra telecom tower. Now you are saying you will uproot it, airlift it, whatever you will do it. Because of that, there will be some damage cost to the building. That means now the building owner will say, let's say the repair cost is 20 lakh rupees. Assumption. Okay. I'm taking hypothetical value. It's all. Okay. So due to the repair cost due to this approved process is how much, sir? 20 lakh rupees. Now who has to incur this repair cost? Now the question is, this 20 lakh, let's say this repair cost, when it'll arise? It'll arise now or it'll occur at the end of 5th year? At the end of 5th year only this repair cost will arise, correct? Who has to incur this? GA. This repair cost should be capitalized and added to the cost of telecom tower. Telecom tower is an asset, no sir? Yes, all the PP and its recognition criteria is satisfied. So telecom tower is your property, plant and equipment. Yes. Can you add this 20 lakh to the cost of PP or should it go to P&L? What according to you? Should we transfer this 20 lakh, capitalize this or P&L? This we call it as DSR, decommissioning and site restoration cost. Decommissioning and site restoration cost. So to decommission anything means to remove it, to dismantle or to remove. That removal activity we call it as what, sir? Decommissioning. Here what are you decommissioning? Telecom tower. Okay. Then when you decommission this asset, when you decommission an asset, will there be any damage cost to the building? Yes. And to repair that damage cost, how much you are incurring? That is nothing but your SR, as in site restoration. There's some damage cost to that site or some building which you are restoring. Hence the name DSR cost. Done. What AS10 says is even DSR cost can be or should be capitalized. Now, even DSR cost should be capitalized. What is the intention behind or logic behind this standard is? One, think about it. Sir, without incurring DSR cost, can Geo guys install telecom tower on this building? Without this DSR cost, can Geo guys install the telecom tower? No. Unless they install the telecom tower, can telecom tower be used the way management wants it? No. That means to telecom tower to operate in a way management wants it, is this DSR cost necessary? Very much yes. Because only when, if you say okay to this, then only building owner will give permission. Only then Geo guys will be able to use telecom tower. That means to use this telecom tower, is DSR cost necessary? Yes. Hence this also becomes like what? This also becomes like that. This is also directly related to that asset only, no? Because if this asset is not there, will DSR cost come? No. So it is directly related. That means you should have coupled it under DSR only, no sir. Why? I mean, we could have bought this under DAC only. Why did they calling it a separate section? Problem here is, sir, in my previous example, this transportation cost and all, you'll incur later or initially only? You purchase machinery now, you incur transportation cost also? No. But in case of DSR, telecom tower you will install it now in year 1 beginning and start using it for how many years? 5 years. DSR cost will come now or at the end of 5th year? End of 5th year. Normally your DAX you will incur it at the inception, initial stages, but DSR generally will come only at the end of the year. Hence a separate provision or guidance was required. Can you add this? Yes. But the question is, can you add 20 lakh? That would be wrong. Because you are capitalizing this expenditure now. Because when you have to account, sir, at the end of 5th year, asset itself is not there. How can you capitalize? At the end of 5th year, asset only will not be there. Can you capitalize at the end of 5th year? Oh, no. You'll capitalize when? You'll capitalize at year 0, meaning year 1 ka beginning. You will add this DSR cost at not at the end of 5th year. You will capitalize it at the beginning of year 1 itself. Because when will you start using the asset? From year 1 beginning onwards. So you will add this DSR cost also from year 1 beginning. But 20 lakh is a cost you will incur at year 1 beginning or year 5 end? Year 5 end. That means this 20 lakh is the present value or is it future value? This 20 lakh you will not incur it now. You'll incur it at the end of year 5. So it's a future cost. Hence what you need to do is you can capitalize DSR cost, but not at its full 20 lakh. You have to find out you have to use the discount factor and find out its present value. Present value of DSR cost only can be capitalized. Let's say that present value comes to 12 lakh rupees. There's a way to calculate it. It is not there. Maybe in FM we will study about all this stuff. In mathematics you must have calculated the present value, future value calculation using one rate. Same thing. That rate here we call it as a discount factor. That's all. Discount factor will be given to us in the question. So using that discount factor and future value, we can find out present value. How much is that present value? 12 lakh. That 12 lakh you shall capitalize. But how much are we paying, sir? 20 lakh. So what is the difference, sir? 8 lakh. That is your present value and time value ka money ka, or this 8 lakh rupees is your time value of money ka interest cost. That 8 lakh will be transferred off to P&L. Meaning, if you have 12 lakh rupees with you now, and if you invest in fixed deposit for a period of 5 years, bank at the end of 5th year will give you how much? 20 lakh. If you invest 12 lakh rupees now, at the end of 5th year, it will become 20 lakh. How much it increased by? 8 lakh. Why it increased by? Because bank gave you interest. So that means this 8 lakh difference is nothing but your interest charges that will be transferred off to. You don't have to worry about this accounting. It is not there. It will come in the next stage. Don't worry about journal entry for all this. It will become 2. First of all, this only is not covered in a big way. I am explaining it to you for your reference. That's all. Okay, sir. So what is the whole takeaway of this? DSR cost, can you capitalize? Yes. At full value or present value? Present value of DSR cost can be added. That's what I've written over. Add present value of DSR cost. Easy. That much if you remember. Good enough. Last concept to then break. Shahrukh Khan is doing. Can we do it, Dada? Any doubt? That's it. So okay, is it? No. They're all full alive and awake. Yes, no? Okay. Fascinating, somebody is saying. What is fascinating? I don't know. Hey, you're watching something in sideline, John, be honest. Nobody is fascinating for all this and all. Just kidding. Okay. What is fascinating? I don't know. He told it. Not me. Okay. Next is, sir, we saw till here cost ka inclusions. What and all can be considered as cost? The next aspect is cost ka exclusions. There are few costs that should be excluded. One is your refundable tax. That we know. Non-refundable taxes you can add. Refundable taxes you can. If there is any relocation, reorganization cost, specifically exclude. Meaning, let's say I'm using this laptop in this premises. I'm already using this laptop, speaker, mic, furniture and all in this premises. Let's say I shifted my building 2 kilometers away. This rent got over. So we shifted the premises to a new building, which is about, let's say, 5 kilometers away. That means all this machineries all this equipments have to transport it to a new location. I'll have to incur some relocation cost. Can I add relocation cost to all this? The cost of laptop, mic and all, can I add it? No. What is the cutoff stage, sir? What is the cutoff stage? Do not forget that. What is the cutoff stage? Present location and management intended condition. Am I already using this laptop, speaker, mics? Yes. That means asset is already functioning the way management wants it. Next, now they decided to shift means asset has already reached that cutoff stage. Now relocation cost, reorganization cost and all cannot be capitalized. It will be straight away going off to because asset is already functioning the way the management wants it. Yes, people. And inauguration cost. Inauguration costs are all marketing costs. Normally they do. When you open the new factory, they'll call a superstar for ribbon cutting, that cutting, this cutting. So all that is your inauguration cost or marketing cost specifically goes off to P&L account because they are not directly related to the asset. They are all general marketing gimmicks. So standard clearly says do not capitalize them, straight away transfer it off to P&L. No matter whatever is the expense. 1 lakh or 1 crore, 10 crore doesn't matter. Inauguration cost, marketing expense and all straight away to P&L. And operating expenditure. Operating expenditure and all is your salary, rent or electricity. So if you are operating, now if you are using this laptop means we are obviously incurring electricity charges. Monthly electricity charges can I capitalize to the cost of laptop? They are all what? Routine operating expenditure. Obviously laptop means an employee is using that. For that employee I'm paying some salary. Those are all your routine expenses that will be transferred over where? P&L account. Club under exclusion category. They will give you all this. They'll give you, this is also one type of popular question in AS10. They'll give you a list of costs and say which are to be capitalized and which will go off to P&L account. So for this particular chart will help you. Okay. And then general administrative and selling and distribution overheads. That we saw that receptionist ka salary and that salesman's ka commission. If it is a general cost, never it will be capitalized. Rather it will be transferred off to P&L account. Sir, ArivuPro given free mobile to employee to retain. Mobile and all, yes. For students. Yeah. Naomi. Yeah, we'll give it. What else you want? Okay. Anything else? So for personal purpose, if you are giving it, it will not be PP. Okay. If you're giving free mobiles to personal purpose, then it will be a perquisites. Then it will be treated as salary. You have seen various perquisites you studied under your income tax act. It will be treated like that. It will be accounted as salary. If you're giving some mobile phones for business purpose, it will be capitalized. Like yeah. Right. We'll see. We are coming up with few things. We'll see. Not sure. I don't look into those aspects. You can reach out. Somebody will guide you. Okay. Any doubt anybody else, or can we take that much awaited break? So let's take about 10 minutes break and come back. Thank you.